Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently up 4.61% to 39,647. Ethereum up 3.05% to 2592. From my 30 plus years in financial markets, I explained the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Thank you for being a part of our globally extended family. I appreciate you being here. In yesterday's episode, we covered MiCA and the potential banning of Bitcoin in Europe a few years away, but it was a quite concerning development. That vote failed. That section on banning Bitcoin was not approved. It was downvoted. So a decision to enter negotiations with the EU governments on the final shape of the bill was adopted, 33 votes to 25. Cryptos are safe in Europe for the time being. Unfortunately, many people sold off yesterday because they saw really bad news or the potential for bad news. Rule 570, psychology sets profitability. Many people want to know, how much can I make from crypto trading and investing? That really comes down to what zone your psychology is in. When people join the crypto market, they first inhabit the panic zone because they don't know the rules, they don't know the laws, and they don't know what to look for. It's really common to inhabit this zone when people first start. And these are the 4 stages that every single investor and trader progresses through to become professional. Unfortunately, zones 1 and zones 2 are the lose money zones. They're based on a concept of certainty. People light switch, they go all in or all out. They buy on green, they sell on red. They do so many behaviors that absolutely cost them so much money, but they just don't know any better. When we get down to zone 3 and zone 4, and that's what we teach inside the masterclass, it's all about probability and rules, patience, 3-way decision making, understanding percentages, having the CTKS method for marking up your charts, having a 10-5-10 volatility fund, buying on red, selling on green, and you don't just necessarily buy on red one day and sell on green the next. You can if you wish, but it's generally better idea to scale in and scale out. That's why when we talk about the light switch inside zone 1 and zone 2, we talk about a dimmer gradually scaling in and gradually scaling out of positions inside zone 3 and zone 4. But making money doesn't mean you keep it. Keeping money and keeping a good life requires different rules. That's why we talk about real wealth. Crypto technical analysts scientifically track investor attention, and investor attention is measured by price. Price is the reality. Promises can be made by anyone, but price actually determines what's happening. First of all, we mark up their charts with the CTKS method. We look for outside trends and collect probabilities. It's really important to look outside the crypto market. If you're just stuck inside the crypto market, you'll be hit with many losses because outside events actually impact crypto. And I'm talking stock market events. When we look at timing, we come back into the crypto market, understanding that opportunities reset daily. We enhance our pattern recognition, find the market's focus. We have to get our mind together. We have to be professional and fearless, have probabilistic fearlessness, which is not easy. Many people, in fact the majority of people, have a very negative relationship with money, and that's actually our stock as crypto technical analysts. We put money to work for us. If we have a negative relationship with money, how can we have a good return? It just won't follow. Then we get up to the trigger section where there are specific methodologies to buy and sell. We patiently apply the 10-5-10 rule. We make volatility our best friend, and we make sure that we don't target too many opportunities. We just want to target the ones we can handle and look after. Currently, Bitcoin is trading at 39,663. We saw a real Chicken Little act. What happened when Mika potentially banned Bitcoin in Europe? The market actually got really freaked out, and this was the time when crypto technical analysts were actually leaning into positions. As this came down, I was buying, and it's always the same. If we get a big down push in price, we actually want to be part of that. And when you look at these technical violations underneath this support line, they're actually generally quite good to get involved with. And of course, there's a lot of data that we need to look at, but things are looking reasonably positive. And because the European Union didn't ban Bitcoin, or more specifically, proof of work, that's actually really positive for the crypto market. But please note, we're still under duress, gravitational duress. We have to breach the 40,340 mark. When we get up to around 41,568, we're looking a lot better then. And we need to get past all of this particular resistance from $45,092 to $47,127. I'd be really interested. What do you feel? Are you feeling bullish or bearish? Please let me know in the comments section. One thing that we do is that we collect probabilities. Generally, futures open interest is very positively associated with Bitcoin's price. We can see Binance futures open interest here, this green line. When it increases, the price of Bitcoin, this gold line, also increases. You can see it's got quite a good relationship here. But what is this chart really telling us? I'll show you what I see. I see this. I see that we've got a particular support in futures open interest. And what we know is that when futures open interest is going up, that is positive for Bitcoin. And why do we care about Bitcoin? Why aren't we just looking at our beloved alts? Because we know no alt escapes Bitcoin's gravity. If Bitcoin goes up, the entire market will go up. If Bitcoin goes down, the entire market will go down. Now, what do we see here? We see 3 positives and 1 negative. You'll find that inside financial markets, there's not always 100% positive. There generally is some bad news. It's just the way it goes. When we look at this very tight resistance line for futures open interest, we can see we've crossed to the other side. That's 1 positive. When we look at this support coming down through here, that is another positive. When we look at the long-term support, that is even more positive, but we have 1 negative. If we look at this intermediate support, we're just under resistance. So we would want futures open interest to get into this zone to start to bolt up. And when it does, and I believe it will, we're looking really good. In order for you to profitably invest and trade, and we know all investors become traders anytime they buy or sell, you need a lot of rules, a lot. And Rule 45 is amongst the most important. No alt can escape Bitcoin's gravity. What we see here is Bitcoin coming up. What is the rest of the crypto market doing? It's also moving up. Some particular cryptos will move up more strongly than other ones. And inside Zone 1 and Zone 2, there's a really specific focus that people do. When they look at a heat map like this, they'll go to the greenest of the green and say, I need to buy Rune. I have to buy Rune. It's come up 17.3%. It will go to the moon. I need to get Rune. This is what absolutely professionals do not do. The reason for that is Rule 114. Markets penalize certainty. If you're absolutely certain that something is going to happen inside a financial market, get ready for a rug pull. I'll come back later to some really interesting alts that could be worthy of your attention. But let's collect probabilities. We need to collect as many probabilities as we can. When we look at the crypto fear and greed index, we can see we're still under extreme fear inside the crypto market. We had a bit of a boost up recently, but that got flattened pretty quickly. But the shorts have not been able, or the bears have not been able to push Bitcoin's price down. And why is that? Because we can see in aggregated open interest, we're getting a line of increasing open interest, which is exactly what we spoke about, and I've been speaking about that for quite a while now. I had a few people reach out to me and say, Ken, what is this thing about the funding rate? People are talking about a negative funding rate, or the funding rate going negative. The way to actually look at this, you always want consistently reliable signals, and that's something that we talk a lot about inside the masterclass. Have a look at this. This is BitMEX funding rates. And one thing, friends don't let friends leverage trade. So I'm not suggesting that you should go out there and leverage trade away. Please don't. Crypto is already leveraged up, but we can get some insight as to what the market could be doing. Remember this black swan event. This was the US liquidity crisis and COVID shutdown of the world. What happened to the funding rate? Was it negative or was it positive? Was it below the line? Absolutely. It was starkly below the line. People who understand the KS model understand that this particular area is a capitulation zone. What was the funding rate doing then? It was going negative. And what about this big pullback here? It was going negative. What does this actually show us? When the funding rate is going negative, which way do you expect price to go? Let's look at it the other way. For example, when price, the funding rate going positive, what do we anticipate? What is price doing here? It's going up. Negative, it's going down. Positive, it's going up. You want consistently reliable signals. This is really, really important. I see so many influencers out there talking about signals and they're just spaghetti. 1 minute they'll be doing one thing, 1 minute they'll be doing another thing, and they're completely confused on what constitutes a consistent signal. This is quite a good signal, and the more negative, the more sell-off, the more positive, the more the gain. That's a really good question, and I really appreciate people reaching out to me and asking questions. When we look through futures and derivatives data, we're just trying to get an understanding of how the market is moving internally. Is it about to sell off? It is about to turn around. What is it going to do? And we need to stack probabilities. When we look at CME Bitcoin Futures open interest, what do you see here? What do you actually see? You can see, for example, that green line is the futures open interest from CME, and we can see the gold is Bitcoin's price. Do you notice a consistently reliable signal? Do you see futures open interest come up as Bitcoin's price comes up? And we know Bitcoin moves the market, and no alt can escape Bitcoin's gravity, especially its directional percentage moves. So we've got something pretty good here. Now, what actually do you see? How would you interpret this information? This is what I actually see. When I look at this, the CME Bitcoin Futures Open Interest, when we look towards the May sell-off, we saw Bitcoin Futures Open Interest collapsing, then turning around, getting above this particular resistance, turning it to support tentatively, and then starting to turn around. You notice the bottom here at 1. What have we seen recently? We've seen a very tight resistance level crossed. We've seen another resistance level crossed. And what are we looking at here? We're seeing a bottoming out of that futures open interest. What do you anticipate seeing next? Please let me know in the comments section. We have a magnificent community and we discuss things in depth in the comments section on YouTube. So please reach out and let us know what you think is going to happen here. It's a very, very important thing to discuss. We can see from 24-hour liquidations, 111.25 million across 30,648 positions, and around 70% of the liquidations being long. You can always see that longs and shorts are liquidated every single day. Be careful. If you're using leverage trading and you don't know what you're doing, you are likely to get liquidated in both directions. Even if you do know what you're doing, you're likely to get liquidated in both directions. And what I mean by that, people put basic protection, hedge protection. They try to make sure that if the price goes down, they're hedged, or if it goes up, they're hedged. They try and box in a specific return. Hedging doesn't work in crypto. You can get wiped out. Now let's look outside crypto and try to understand what the market is doing. Cryptocurrencies are a really tiny market, and they do represent something that a lot of people misunderstand. I'll go through that in a minute. You can see the global market, the global stock market is really big, nearly 120 trillion, and the bond market even bigger than that. The stocks and the bond markets are intertwined. They do not escape each other's gravity. When you look at cryptocurrency being so tiny, do you think crypto can actually escape the gravity of the stock market and the bond market? Let me know in the comments section. It's a really good thing to talk about. One thing that you might like to actually think about more deeply is what actually is crypto. Crypto is the ownership layer of the next generation of the internet, what's called Web 3.0. And when we look at the adoption cycle in crypto, we're really, really early. And I had an ISP, an internet service provider, which I owned and ran in 1993, in the dark days of the internet. And I can tell you, the government came after the internet with abandon. It was really concerned that established industries would suffer under the internet's weight. And what's happened? It's been exactly the opposite. And you can see that the internet grew and grew and grew, just like mobile phones, cellular phones. What we're seeing here is crypto just starting to take off in its adoption cycle. It's really helpful to understand what is Web 3.0. Web 1.0 is where you could read information. Web 2.0 was where you could read it, but you could also make comments. Web 3.0 is where you can read it, you can write it, and you can own it. Wow! A lot of people, a lot of really smart people, do not see what discontinuous innovation brings. They can understand continuous innovation because it's continuous. It's just like walking up steps. But discontinuous innovation, which is called invention, is something else completely. It's so disruptive. Paul Krugman, back in 1998, and this guy is a heavyweight, he won a Nobel Prize in economics. Well done, Paul. But unfortunately, Paul, even though he's an incredibly bright person, he said by 2005 or so, it will become clear that the internet's impact on the economy has been no greater than fax machines. Hang on a second. What's a fax machine? Many years ago, we had these incredible things called fax machines. Actually, I think I owned that one. What's it doing in this picture? Anyway, the concept is that a fax machine, you could dial up someone else and use an inbuilt modem to transfer pages of information. It was very cutting edge at the time. So that's what Paul was talking about. And we kind of know fax machines have gone the way of the dinosaur. We just don't need it. The internet replaced them. But it's really important to understand what cryptocurrency is, where it's going. It has decades and decades of growth inside the crypto industry. It's just starting to take off, and it's an ownership layer. It's almost like you're buying into Google, Facebook, Amazon. For the 22nd century, you could think about it like that. It's just so cool. All the financial markets are connected, and when people get into crypto, they just look at crypto. They don't care about the stock market. And yeah, I kind of understand it, but the concept is if you don't look at the macroeconomic picture, you're going to get really severely punished long term. When we look at, for example, the fear index, the VIX, inside the US market, and I hear you saying, Ken, why are you looking at the US market? We look at the US market because it's disproportionately large. The US market, as of January 2021, brought in about $56 out of every $100 that was invested in stock markets globally throughout the world. You can see Japan and China, UK, France, Switzerland, Germany, their stock markets, when added together, won't even match the US's. This is the exact reason that we have to look at the US market. It matters. When we look at the fear gauge, we've seen the fear gauge continue to go up. We had a bit of a fall in the fear gauge, which was really good. We want to see it spike down. If we see it spike down, which could well happen, and I'll explain why. If we see it spiking down, that's fantastic for all of the markets, especially the crypto market. When we look at economic confidence, we can just see the NASDAQ 100. We can see the NASDAQ 100 has been under a degree of resistance. Masterclass students use the EC method, and when we actually look at this, we can see it's under secondary resistance, trying to retest some of these lows. We hope that it turns around, but it will be very much dependent on if fear comes out of the market. When we look at bond prices, we're seeing some really good things with bond prices. When bond prices go up, economic concern goes up. What have we seen here? Bond prices shot literally up the wall. People were very certain that they were going to go to the moon and back. They hit a resistance level and they bounced off, but then they decayed. This is actually really good. If we saw a parabolic increase in economic concern, we would be worried that a major correction is coming. That is actually not the case. We've seen the bond prices retreat substantially. What about gold? Gold is a measure of geopolitical risk. And of course, with what Russia's doing to Ukraine at the moment, gold absolutely went bananas. And what did we see? Everybody was so certain that gold was going to be $5,000 that all of a sudden it dropped from around 2080 down to 1955. Remember, the markets penalize certainty. Be really careful if you're certain. When we look at the US dollar, the Dixie or DXY, we can see the US dollar is strengthening at the moment. When we look at oil, oil was another one. Everybody was saying, oil, it can only go up. Oh my goodness, it's taking off, it's going to the moon. And then, pang, what did the markets do? It penalized certainty. Please be aware of this. This is what markets do. We would expect all of these measures will come down to some form of support and do a technical bounce up. It's not over. I don't expect all of these things. I don't expect gold to collapse, the bond prices to collapse, oil to collapse. I think they will bounce, but please bear in mind, the markets do not reward certainty, either to the positive degree or to the negative degree. And sharp angles reflect. Always bear this in mind. This is really, really important. It's an important rule for any crypto technical analyst. And we share those rules inside the CTKS Masterclass. One concerning thing that we see is the 5-year break-even inflation rate is just marching up and it's not doing much of a pullback. This could actually force the Fed to increase interest rates over the expected 25 basis points or 0.25%. We'll have to bear this in mind. We would want this to come down, and it's going up because oil is going up. And another geopolitical risk tied to fertilizer and food and wheat and so many different things. This is basically the potential for cost push inflation, but we would expect it to be coming down as these come down. We're not actually seeing that. That could concern the Fed. Remember, it's always grey inside the financial market. If you want certainty, if you want it has to go up, 100% it's going up. be careful, because a lot of people thought that with oil, thought that with gold, thought that with the bond price, and look what happened. They just decayed. This is the exact reason why, as professional crypto technical analysts, we make 3 in advance probabilistic choices. We know what we'll do if the price goes down, goes up, or goes sideways. When people enter the market, any market, zone 1 and zone 2 behavior, it must keep on going up. Think about oil and gold and bond prices. And then all of a sudden, what happens? Certainty is penalized by the market, and they collapse, and then they sell, probably at a support level, and then it does a technical bounce, and then they go in again because they're buying on green, and it decays again, and they sell on red. You can see buying on green, selling on red is a license to destroy your financial position in the market. How do we actually summarize this for Bitcoin? Because that's actually what we're all about. We're all about crypto, but we have to start with the gravitational basis of the crypto market, which is Bitcoin, and Bitcoin is influenced by the stock market. One thing to bear in mind is that the Nasdaq does not trade 24 hours a day. It closes, but whereas crypto is always open, it's kind of like 7-Eleven. There's a really special trick people inside the stock market can use when you see Bitcoin rallying up after the Nasdaq, for example, has rallied down. We've got a little bit of a dog leg here, but this can actually point to the fact that the US indices will open in the positive direction. Now, what's this little guy? What's FUD down here? Who's that? That little guy is the famous character Chicken Little from the story dating back to the 1940s. Basically, Chicken Little was hit in the head with an acorn as he was just going about his business. And he said, "The sky hit me. The sky is falling. The sky is falling." And then he grabbed all his friends, the media, and he said, "The sky is falling." And they all said, "The sky is falling." And then they went to the king, and the king said, "Oh, Chicken Little, you just got an acorn in your head. That's all. The sky isn't falling." So we can think about Chicken Little as being a fear, uncertainty, and doubt. From time to time, I'll give the thumbnails where Chicken Little is telling the news. And that's pretty interesting stuff, because it's important to understand what the retail mindset actually thinks. And this is what Zone 1 and Zone 2 people get caught up in all the time. You can see it's really, really destructive for your financial health to get pushed around by the markets. What we do instead, as crypto technical analysts, we dig more deeply, and we don't take anybody's word for anything. We just do the research. And of course, stack the probabilities, knowing that certainty is always punished. Now, what is this red line here? This is the number of margin shorts coming into the market. We can see we've had a big fall off. What did we see actually recently? Because potentially of the potential MiCA ban of Bitcoin in Europe, that's just the EU didn't want, for example, the proof of work to go out inside crypto, and they were thinking of banning it. Well, specific people were thinking of banning it, but it didn't happen, which is actually really good for crypto. The concept is we saw a big jump up in the shorts. That was that they expected the price of Bitcoin and all of crypto to go down, to break this support line. But this support line has been incredibly strong all the way through. And what did we see? The ban didn't materialize. Prices are starting to go up. We do have to breach resistance, and we'll do that at about 41,000. Just keep that in mind. Please let me know, as we've gone through the futures open interest and various measures, are you feeling bullish or bearish, and has that changed since I asked you at the start of this video? When we look at Rule 45, no alt can escape Bitcoin's gravity, and look across the top cryptos, we notice one thing, really good thing, that Bitcoin's price has been doing quite well. It's being really, really well supported in an upwards direction. And we can see a couple of other things. Look at Ethereum. We can see Ethereum starting to consolidate. Adrian asked a question about consolidation. How long does consolidation have to occur for? The answer to that question, it depends what time frame you're actually using. But the concept of consolidation, you get a big sell-off or a big uptick, and it consolidates around and then moves down. Consolidations inside crypto can last very, very little time because we're always seeing explosions, implosions, explosions, implosions, explosions, implosions, explosions. You get the idea. And it all happens exponentially. It's unlike anything that we actually see in the stock market or Forex. The stock market and Forex requires leverage trading because things move around so very minutely that they have to magnify gains. But inside crypto, you can just, and I would always suggest you buy at spot. Because it's so incredibly volatile, you have to be capable of sitting through the volatility and not going broke in the process. Because if you've actually leveraged, they're going to call you in on some stage, and it's very, very expensive. Depending on what way you go, you can lose more than your entire account. So please, please, please do not leverage trade. Friends, don't let friends leverage trade. Let's have a look at Binance Coin. We can see Binance Coin still under resistance. Note the pretty different concept here. Bitcoin has been making its way up. You can see Binance Coin is a little bit more wobbly, not quite as strong. Look at XRP. Please let me know what you think of this chart pattern. Personally, I really like it. What is it showing you? Please let me know in the comments. It's fantastic to actually get deeper in and discuss these things as a community. And we can do a sort of a paid class in the comments section on YouTube if you like, which is free. So the concept is, what do you see here in XRP's price? It's very, very clear. The masterclass students, you should be able to identify that really, really well. Let's have a look at ADA, Cardano. We're actually seeing something here which is really cool. Look at this level of consolidation that is happening here, very much like Ethereum. But ADA has been under gravitational duress for quite some time. If things start to move up, and we would believe that they would start to move up from what we've seen in terms of Bitcoin's gravity, this could get a slingshot effect, and I'll just explain what that is in a minute. We can see Sol not as solid as ADA. ADA could potentially be better to get in on than Sol in this particular case. But when we get these big sell-offs, these unmaintainable sell-offs, they're fantastic to enter for a turnaround trade. Looking at AVAX, we can see AVAX following Bitcoin's gravity, that blue line in the background. And what about Luna? You can see here that Luna came down and was underperforming Bitcoin's gravity, this blue line, quite substantially. But then Luna decided to go, as Luna does, in its lunatic path, and it did really, really well. We've talked about waiting for a couple of weeks to see what happens with Luna. I drew this line in here and said, let's just see what actually plays out here. We've seen a weakening of Luna's price when it came up to hit its previous all-time high at 103.60. Does it get up? Does it take out that previous all-time high? It may. And it all realistically depends on the momentum, if it can keep it. One thing, if we see the entire market turning around, why would people be involved with Luna? Why wouldn't they actually go to ADA, go into XRP, go into some of these beaten down ones like Sol, like Ethereum? You've always got to think, what would other people do? That's why we do our best not to fall in love with our cryptos. Of course, they're your beloved altcoin and you love them dearly, but just be aware things can change. I have a specific process to find the market's attention, and there's more than one process as well. What I'm looking at here is the upshoot in Binance derivative value. the top ones, what we see is that OGN, Origin Protocol, has a lot of interest inside the derivatives market, and we can see that's caused a big spike in value. Just note, we're coming up to a resistance level. We may get a push down to around 37.47 and a resumption, and we've got potential resistance around the 60 cent mark. Just bear these things in mind. And when we look at Rune, we can see very similar things. We had this offshoot, this decay in price. Price came up and tested this resistance, came back to support, and now seeking to get above this resistance. It could wobble back to around the $6 mark. Let's have a look at KTC. CTSI is starting to gain momentum inside the market. It's really good to identify cryptos that could potentially be turnarounds. And I'm going to show you the weakest ones, the 8 weakest ones in the next area. Having a look at KNC, Kyber Network. Kyber Network has been doing incredibly well, but always realize it's going up and going down. These movements may not look like much, but they're very, very large in percentage terms. The graph, GRT, is also attracting open interest, and we can see a push up in its price. It's coming into a resistance level. Just beware of that. Luna has been doing really, really well. Luna is an absolute outstanding crypto in this particular period of time, but there's always a changing of the guards in some stage. We've seen the crypto markets come down for about 3 months, and Luna has done really, really well during that period of time. Just be aware that when the market starts to change character, the cryptos will change character also. Remember, no such thing as certainty, only probability. We can also see IOTEX. IOTEX just has rampant implosions and explosions. These sharp angles reflecting is a really good rule to understand. What we're actually seeing, Masterclass students, this is the BA process actually coming in through here. Just keep that in mind. And when we look at CTK, CTK is leveling out like ADA, like Ethereum. Keep these things in mind. And when you go into any particular crypto, just do your research, know what you're doing. Nobody knows your needs except for you. When we look at a particular crypto from a crypto technical analyst perspective, we're looking to gain specific percentage returns, and that may take some time to do, but if we beat 0.1% or 1% interest that the banks in their generosity are offering us over a year, we've done pretty well if we beat that. What you'll learn as a crypto technical analyst, you don't need to chase really, really large percentage gains. You just want to accumulate smaller ones. And that way you'll get all the X's that you ever dreamed of. Let's reverse this and let's look at the particular cryptos, the 8 cryptos that have had the most open interest come out of them, basically the greatest decay in open interest. We can see Phantom decaying. I want to let you know the guy from Coin Bureau is actually going to do a special on Phantom. It should be coming up very, very shortly, I believe, because Guy has so many followers that we could see a very big push in Phantom's price. Let's just keep our eye open for this. I really like Phantom, and the concept that it's selling off like this is, to me, fantastic. And you say, Ken, what do you mean? Fantastic. We should be running for the hills. This is going to go to zero. We've seen it so many times. For example, with waves, you can see the price come down and then the price come up, go down, come up. Price is always moving in a wave. That's also a really, really powerful rule. Rule 4, price moves in waves. When people get into financial markets, they just think, if the price goes up, it's going up forever. And if the price goes down, it's going down forever. No, it's just moving in a wave. Don't worry about it. It's all up and down. Okay, let's look at Cello. Cello has a lot of open interest coming out of it at the moment, but we can see that's not too bad a structure. It's definitely under resistance, but it's starting to turn around. And one thing that you might like to always think about, what do you want to do? Do you want to get into a crypto when it's going up parabolically, when all the zone 1 and zone 2 people are coming in? Or do you want to accumulate when all the zone 1 and zone 2 people have absolutely lost interest? The answer, the second one. That's where professionals accumulate. This is what we're all about inside our community, teaching the smart money mindset. ATA, we can see, is under resistance. I'm not suggesting that you go into any of these particular cryptos. I'm just putting them in front of you because it's really important to understand. For example, Phantom is really, really strong. It's still a very strong crypto, a very strong project, but it's getting beaten down at the moment. And that is exactly the time to get in. People talk about dollar cost averaging, but they typically dollar cost average on the way up because they feel safe. You should be dollar cost averaging on the way down because it is safe. It's all about getting the percentages to move in your favor. And for example, if we look at this particular price action, from around this current price up to, say, this level of resistance, that's an 82.74% gain. And even if we think about being under resistance right now for Phantom, we're looking at about 66, 67%. Believe me, you can make money in any market, but you just have to know the rules, and you have to know what you're doing. Chiliz, we can see from this structure, Chiliz is starting to get above multiple levels of resistance, and it's got multiple levels of support below. This could be actually quite interesting. Just keep your eye on it. And again, I'm not recommending you go into anything. I'm just putting things in front of you to have a look at as a thought experiment. Storage, we can see storage still under quite a bit of resistance, but starting slowly to turn around. Waves has been an absolute standout. Do you feel certain that this is going up and up and up to infinity and beyond? If you do, what should you do? You should run. One thing that people find when they look inside crypto, when they see this kind of action, they say, oh, I feel really safe and secure. I know it's going to go up because it's been going up for quite a while. It could. That's absolutely correct, that it could keep on going up, but the probabilities actually weigh to the downside. Masterclass students, this is an SA forming. Let's have a look at AVAX. AVAX, another really, really strong crypto. We can see it's overcome a level of resistance. It had a level of support. It's just broken down below that. And we can see there's not too much support here. AVAX is looking pretty weak. But one thing that we do know, price is always moving in a wave. If it moves in a wave and just comes back to a particular resistance level, say just around here, that's around a 22% gain. There's always gains that can be made in the crypto market because crypto moves around so wildly. There's always opportunities, but you have to keep your eye on it. A strategy the crypto technical analysts do is they seek to buy at successively lower levels below the current price, and they never, ever, ever buy at market. Buying at market means that you pay over the actual price of whatever that crypto is. If you bought at market at 68.91, you would actually pay more than that. You've got to be really careful about buying at market. And people that buy at market, the exchanges and the platforms, if you do buy at market, they will always charge you more. Please bear that in mind. Let's have a look at Matic. We can see Matic still under resistance, but Matic is a really interesting crypto. It diverges and converges with Bitcoin's gravity. So just bear this in mind. We've seen a convergence at the moment. I'd just like to say thank you to Tails. Tails and I have been working on this particular graphic. Learn when to buy and when to sell like smart money. How cool is that? Thank you, Tails. And please come across to www.cryptotechnicalanalysis.org to learn more about the CryptoTradingKS Masterclass. Another good thing to talk about in the comments section is inflation. If we look worldwide at inflation through Google search trends, we can see inflation has reached 100%. Not a bad effort. People are concerned about inflation. And rightly so, because the next Federal Open Market Committee meeting, FOMC meeting, is on March 15th to 16th. And that will be live in about 37 hours. It's good to just bear in mind that when we do have these meetings, it takes them quite a while to actually put out the minutes of the meeting. The only thing that we're looking for here is how the Federal Reserve Chair, Jerome Powell, actually attacks inflation. The consensus is that a 25 basis point rise will be considered. And we've seen inflation is a little bit out of control at the moment, and Janet Yellen has said as much. Janet Yellen is the US Treasury Secretary. She's basically said that she believes that inflation will remain uncomfortably high for the next 12 months. What we're actually looking for is this 5-year inflation break-even rate, 5-year break-even inflation rate to come down. Naughty thing, come down. When we look at bond prices, the price of gold, oil futures, it actually points towards the fact that Jerome Powell will probably do the 25 basis point increase. And this increase in basis points is absolutely fine. I'll do a special episode on that for you. The concept is that we just want to get this break-even inflation rate down. And it's quite surprising it hasn't come down as oil has come down. So it's throwing some mixed messages into the market at the moment. But things will become clear, at least in a few days' time. Please let me know what you think about the FOMC's meeting and what might happen. What's your take on it? I hope you found the content useful. Please consider sharing and liking this video and also subscribing to the channel if you found this content helpful. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the CryptoTradingKS Masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.